Welcome to the technical analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, please feel free to let me know. As always, keep in mind that each and every trade that you take has risk. There's no guarantee of profit on any one trade. I think we all understand that. So you should manage risk in a way that makes sense in terms of trade size and exposure, etc. In addition to using standard tools like a stop loss setting or setting up hedge positions. We'll talk a bit about some advanced risk management features that you'll only find on our AvaTrade Go app and web trader that really are unique for helping to manage risk, and some other nice features as well. As we go along, keep in mind that what we cover is meant to be educational in nature and not meant to be financial advisement. And obviously the other side of the coin with the risk is the fact that each and every trade that you take does have a good potential for profits. And that's our focus, is also to try and go after those potential profits in a way that takes advantage of knowledge about the charts in terms of technical analysis, which is our focus now, and also considering the fundamental news as well, which we'll do within this session. We'll take a look at what's happening fundamentally, and then we'll take a look on the live charts at the technical analysis and work out some technical strategies that maybe we feel make sense for different instruments. Now, when it comes to technical analysis, basically, what is it? It's looking back at the charts, usually candlestick charts, to get a feel for what has the history been in terms of the movements of the prices. And maybe you can find patterns, certain price levels that look important, and those patterns and price levels can help dictate your strategy moving forward in terms of what prices you might prefer to get in and out of. Now, we tend to lean on manual methods of technical analysis in my webinars, and specifically it's done that way rather than depending on indicators, so that you can force yourself to learn and understand what's actually happening with the prices. You understand the price levels and the breakthroughs and ranging patterns, etc. If you rely on an indicator just to tell you when to buy or sell, sometimes it can work. Indicators are certainly helpful. I'm not against indicators, but certainly as human beings, we have the ability to be smarter than the indicator. And so the indicator's looking back at the candles just like we will and determining when something maybe is overbought or oversold. But when we do things manually, we can also take into account the fundamental news situation. We can see things that maybe the indicator isn't programmed to see, etc. Okay, so indicators are good supportive mechanisms. Manual methods tend to be important for your actual understanding of what's happening. If you have any questions, if you want to give any input as we go along, please feel free to do so. I'm happy to share any related information that you might have to share, and also to answer the questions as they come up. Now, a couple things that we'll cover as we get into the webinar is how AvaTrade Go and how our web trader platform can assist you on top of the MT4 and MT5 platforms that we have. And I mentioned that when we were talking about risk, how they can assist you with risk, but also other things like technical analysis and fundamental analysis. There are those features built into our system. So we'll get to that in just a moment. Real quick, I know this is a technical analysis webinar, but it would make sense to understand what's happening fundamentally as well. And it only takes 5 minutes to do that. So let's look at the headlines. Delta variant likely slammed brakes on US economic growth in third quarter. Okay, so that doesn't sound positive. There are some GDP numbers coming out. growth numbers coming out, big economic reports on the economic calendar today. And so this article is leaning towards thinking that maybe the GDP numbers could disappoint because of the Delta variant, the COVID variant, maybe slamming the brakes on the US economic growth. And then we see a headline out of Germany telling us that Germany's COVID caseload makes biggest leap in 2 weeks. So along the same line here, not the happiest headline economically out of the US and out of the European Union now, out of Germany. And then we take a look and we say, all right, so European Central Bank has an interest rate decision today, monetary policy statement, that's coming up soon this afternoon. And so the time frame we're looking at here is New York time. So that's why it looks like it's morning time. Add 5 hours or 7 hours or whatever your GMT offset is to get you to the actual time. And so this has already occurred and is occurring through the day. Talk about monetary policy and et cetera out of the European Union. That could be already moving things. And then we're looking at upcoming information as well, interest rate decision and et cetera. And GDP numbers coming out of the US, jobless claims coming out of the US, pending home sales coming out of the US, et cetera. Okay, so a big calendar day in terms of announcements. So as we look at our technical analysis, we can understand there's a little bit of fear on the markets today, apprehension about COVID, et cetera. That fear came to a head yesterday. We see the numbers here for Dow Jones, S&P 500. Those are red numbers from yesterday. And then today's futures are slightly green, okay? There's a little bit of positivity coming back. The fear is down a little. We see the VIX volatility index down 1%. That tells us that, okay, the fear's not shooting up like yesterday, at least not yet. The volatility fear index yesterday was up about 6%, I think, when we looked at it evening time or afternoon time. So for sure, we've got a calming effect occurring today. Futures are slightly green, but there's apprehension in those headlines we just looked at. A little bit of worry about, well, how much growth was there in the US? What's this effect in Germany and the European Union on an increased caseload, et cetera, in terms of the COVID virus? This is a somewhat positive headline that we're seeing here. Soaring US business starts in pandemic show new normal evolving. A lot of business startups coming because a lot of businesses failed around the world and in the US. And so that creates opportunity for entrepreneurs. And so maybe that's the reason why a lot of businesses are having trouble hiring right now in the US. Maybe that's one of the reasons. You've got a lot of people doing startups, wanting to work from home. It's kind of an effect of the COVID virus as well, as people look for other avenues to make money while they were stuck at home. And so that's something to keep an eye out in the future for. Now, a couple platforms I mentioned, if you are interested in using AvaTrade Go, which I highly recommend you check out, it'll trade right on top of your MT4, MT5 accounts. If we look at the trading platforms and we see we have AvaTrade Go here, if you access this using your mobile device, then go to your app store by clicking the link, or just go to your app store and search for AvaTrade Go. You'll easily find our app and get it on your phone. And now I can show you what the app looks like. There's some nice features for risk management in the order window. AvaProtect I mentioned in the open helps you protect against any and all losses for defined time periods for a small premium cost. And then the take profit stop loss features will calculate your potential profit, your potential risk for you based on how you've set up the trade size and your stop loss and take profit prices. It calculates in your account currency for you what your risk is, what your potential profit is. And that's important for going into moves for you to understand that part of risk management. And I can go ahead and I've got the app here. I'm going to expand it on the screen. And what we can see is, as we go through the app, how simple it is to use and also the features. And so I might go to something that has AvaProtect available along with the other features like gold, silver, FX pairings, have the AvaProtect available, and then you have the other features on everything. And so if I go in and let's say we're buying on gold as an example, and if I choose a take profit and stop loss, let's say, I can expand that option for the stop loss and for the take profit, and then put a price in. So let's say I wanted to take profit on my buy at, I don't know, 1900. Maybe I think gold's going to go up to 1900. Immediately it tells me, well, here's how much you would make if you took profit at 1900. Maybe I say, you know what, I prefer 1950 maybe. Okay, I would make 763. And then if I go to my stop loss and I say, you know what, I think it won't break below 1750. So I get my stop loss down there around 1750, and immediately I see how much I'm risking. Okay, and if I'm happy with that, I hit enter. Maybe my balance is, I don't know, 50,000 in my account, and I say, you know what, risking 500 would be 1%. So maybe I want a larger trade size. So now I can go up, I can change my trade size, I can just add more ounces, right? Let me go to 10 ounces. Okay, so now I have 10 ounces, and I go down, and immediately it adjusted my risk and my potential profit. Now I see I would make around 1,500 USD, because that's the account currency on my demo account here, and I would risk a little less than 500. Okay, so if I had a balance of 50,000, that's a little less than 1% risk, and maybe that's what I want to do, right? Or if I had a balance of 1,000 and I'm looking at this, I'd say, wow, that's almost 50% risk. And I would know I need a smaller trade size. So you can manage your risk here and understand what you're getting into with these features before you place the trade, and you don't have to manually calculate things. It's good for experienced traders as well. And so as you get into the technical analysis strategies and you start to look and see, well, I need my stop loss down, you know, I don't know, $25 in the price of gold, or $50 to get below the support level to feel safe with my stop loss. Well, then the price of your stop loss is not negotiable then. So then now you start adjusting the trade size, and you adjust the trade size until you see the risk that you wanted. So very cool features. Now, another feature would be AvaProtect. So I get AvaProtect down here. I can protect by the hour, by the day. So I've got this potential profit down there that we're looking at of what, 1,500 or something. And maybe I know there are big announcements today. I say, you know what, gold could go flying up $50 an ounce, and I could make a huge, huge profit. So let me protect things all the way to tomorrow. So I do 1 day of protection, and look at that, $80, less than $80 to protect this trade against any losses for 1 full day. Okay, so for a capped cost, small cost, I can let gold ride until this expiration time, and any losses are added back to my account when the coverage ends, or if the trade were to get stopped out, let's say. So very cool feature, lets you rest easy for a capped cost, a known cost for the small premium, and you know, at a trade size like this, if it even goes $10 an ounce in the correct way, you already made back and then some the premium cost. And if you know there are huge announcements like GDP, etc., like today, boy, the potential could be a lot more than $10 movement per ounce in the right direction. So very cool features, and you don't see this anyplace else, really. So now, if I want to leave the order window here and go back, and let's look at some other features, by the way. Since we're talking about technical analysis, I tapped on the lines down here, and as I tapped on the lines, it brought up other options on the app. And since we're talking about technical analysis, we'll look at that. You see, if we look at featured ideas or analyst views, let's bring up analyst views. Look at that, free signals, okay? On a lot of different instruments, cryptocurrencies, other instruments. If I tap on one of those, it brings up the chart, the expected movement, the price points, the ideology or thinking behind it. As you look, it tells you why they think that, the RSI, etc. Price levels, support and resistance, expected movements, free signals right there in your app and also on our web trader. So very cool features. You also, if you use Market Buzz, you'll get fundamental news coming in on stocks. You can right through the app pull up the most recent articles, etc. Okay, so very cool stuff, very easy to use instruments to help you with your technical analysis and your fundamental analysis. I have one person saying they can't hear anything. Let me just do a quick systems check again. Type OK if you're hearing me, if everything's all right with the audio. Just waiting on some responses. Type OK if the audio is working for you. All right, great. I've got enough responses. Thank you. It's just the one person. I'll let them know in the chat box here. Audio fine for all. Just not you. Okay. So that person knows they better check on their side. All right, so good. Let me get rid of this then out of our view. We don't need that. And let's say you want all those same features, but in a web-based platform. Well, we have that on the web trader. So you can just log in here, and when you log in, you'll be on this platform. Looks a little different than the app, but also similar. And it has the same functionality, everything we just looked at. So, if I'm buying on Australian Canadian, there's AvaProtect. Here's all the same features, everything we just went through. And it would also have the features through Trading Central, the Market Buzz, and all of the other things we looked at with the analyst views, the signals, etc. Okay, so very nice. Now, if we jump on the MT4 platform, which I know a lot of you are used to as well, it doesn't have all those special features on the MT4 and MT5, but I know a lot of you are familiar with the charting here. So let's carry out some technical analysis strategies here on this platform to give some input. Just we don't need the app shared on the screen for this part. Now, let me take a look then at US 500. Let us take a look at the US 500. In the last webinar, Tuesday, we talked about that the indices were reaching new highs again, and that also at the same time, the volatility index was up and the US dollar was strengthening. We said, boy, there's a potential for a pullback. And if you didn't attend that webinar, you can look back at the recording on our YouTube channel. All the webinars are recorded and posted there by the next day. And we were drawing lines up here, okay? And saying, boy, it could be a good idea to short this, take a shot at shorting it because it was at such highs, but showing hesitation to go higher. It was already starting to pull back a little, and we saw the fear building Tuesday. And so that's what happened. Any short positions would have done well, wouldn't have hit our stop loss. We put some buy stop positions up here, pending orders as well, so that if we were wrong on the sell and it broke through, we'd have triggered a buy position from a new high. Those didn't trigger. Obviously, because the market dropped with our market moves, as we were hoping it would. Now, when we look at this, we see that there's a bit of a support level that formed at this old resistance level. And so if we go to 4-hour candles, it'll be easier to see. And so I'll draw a line. We say, here's the old resistance, that red line I just drew. And you see that's the new support right now, give or take a little. I could slide this line down. I apologize if you're hearing noise in the background. The trading floor is going a little bit wild. Old resistance, once it's broken through, became new support right here, okay? And so what we're looking at then as we zoom in, 1-hour candles, is a support level that it seems to be holding pretty well, technically speaking, which was an old resistance level. And so a move here, technically speaking, would be if I'm just looking at the technical analysis, okay, I might say, let me buy. And I don't have to risk much to get my stop loss below the support level. And my potential profit without having to break this week's high, my potential profit, if I even go to this resistance here, is more than double what I'm risking. Okay, so I don't even have to go to the high point. I can go to this resistance that formed here. You see it kept hitting and dropping after that. If it just reaches this area, I can take profit at a much higher profit level than what I'm risking. Okay, so on this type of setup, technically speaking, if you're right even 50% of the time, you're in nice profits. Now, what about the fundamentals? What did we see today? Are the fundamentals on our side? And we saw that fear was down slightly. Not all the headlines were glowing, but fear is down slightly, and the futures are green. The indices are green right now as the market opening is approaching. And so looks like there could be some momentum to climb, fundamentally speaking, to try and challenge this resistance level up here. And so if you're taking profit without having to break that resistance by having your stop loss just below that resistance level, then odds are the potential is there for that to happen. All right, no guarantee. So we back ourselves up with our risk management, with our stop loss in this case. And by the way, if you're making a move like this on gold or FX pairing silver, it would make sense to place your trade from our app or from our web trader if you want to put AvaProtect on it. Okay. Okay. So this technically, fundamentally, this move seems to make sense. And what else might happen today? What if the GDP numbers come in and are really bad and scare the market and fear goes through the roof? What might happen to this support level? Who can tell me? What might happen if fear all of a sudden, because of all those announcements that are coming, we know there's the potential for a swing in momentum when you have multiple large announcements in one day. What might happen if fear all of a sudden takes over today? This might drop and break the support and hit our stop loss, yes. And what happens a lot of times when a support level breaks is many times you see a large surge and it tries to test the next support level, maybe down here, right? So what kind of pending order could we prepare to back up this market buy? What kind of pending order could we prepare just in case the momentum swings today and becomes heavily negative? What kind of pending order would sell if this support level breaks? Sell stop or sell limit? I'm testing your knowledge now. And by the way, in the AvaTrade Go mobile app and on the web trader, you don't have to know the answer to that question. Yeah, it would be a sell stop. Thank you, Courage. And on the web trader and AvaTrade Go mobile app, you just have to say sell from, and it makes it a sell stop if it happens to be a lower price. Or buy from, and it makes it the right type of buy pending order. On the MetaTrader platform, it's a little more technical. I have to open up the pending order section. I have to tell it the type of pending order. And so you have to have some knowledge here to know that a sell stop is the kind that sells from a lower point. And so I can now program it to sell from, let's say, 45.40. That would be below the support level. So if this drops and hits 45.40, then it's going to sell for me. Again, on the web trader, AvaTrade Go, you would just say sell from, and it would make it automatically a sell stop. If it happens to be a lower price, you're saying you want to sell from. Okay, stop loss would make sense to put the stop loss back above the broken support. If it breaks the support and we expect to plunge down, then your stop loss being back above the broken support should be safe if it's a true breakthrough, if it's really going to plunge. If it breaks through and then goes back up, then it's not some big surge that's happening, and maybe you cut your losses at that point with a stop loss just back above that price level. And so maybe 45.50, something like that, 10 whole numbers up for a stop loss, and take profit. We drew a line down here at the next support level, 45.25 maybe. Okay, so we're going after about 15 whole numbers in profit, exactly 15, and risking 10 on this particular setup. Okay, so our sell stop is prepared. About 50% more potential profit than what we're risking. And you only get in if there's a confirmed downtrend because the support level gets broken. That's the technical strategy, waiting for a breakthrough. Because you see what happens. Look when this support level broke up here. If I draw a line here, this was a support level. Support, support, support. Look at this candle. Once it broke the support level, look how much further it dropped. All the way down to the next support level, right? So this happens many times. It's called a breakthrough candle. And so we're setting up for a potential breakthrough candle in case the fear changes today, in case those big announcements cause a surge down. Now, if those big announcements cause a surge up, hey, we already have our market buy from above the support, and we should easily win then if the market has a positive momentum. Okay, that's the idea with this strategy. With trading, a lot of times you don't have to be right. You just have to be smart. And what I mean is I could lose one of these and win one of these, and I'm still overall going to make a profit if that happens. Strategic entry points and risk management and potential profit based on the technical analysis. And also we're factoring in the fundamentals today of what's still to come and what we already know about the fundamental headlines and such, okay? And so why is this already bouncing? We're in a small profit. It's not surging down and breaking the support level because we already evaluated. The fear, the VIX volatility fear index is down slightly, okay? There are some slightly positive headlines about, business growth maybe in the US. Yeah, some gloomy headlines a little bit about apprehension about what the GDP numbers would be, but nothing strikingly negative right now. And so when that is the case, a lot of times you get ranging, where it bounces up off the support, down off the resistance until bigger news hits to swing the market one way or another. So you go with what you know and prepare for what's to come. So we're going with what we know, trying to buy off the support and preparing for the unknown in case it reverses. Type OK if you're with me on that, or questions if you have on it. Okay, I don't see any questions. Looks like everybody's okay. So let's move forward to another instrument. And by the way, you could recommend an instrument. We've got some time left. Let's take a look at something like crude oil. Let's go to the commodities, which I have way up here. Okay. Here's gold, crude oil. And so what happened with crude oil? And you see we drew our lines up here in the last webinar, and we said, boy, crude oil could pull back down. We saw fear rising, and down it went. Okay, down it went. That was another nice potential move that folks could have made with what we covered. But now we go to the 4-hour candles, and we see, wow, there's a support level down here now. You see? Support, support, and that's where it bounced from now. Look how close it is to the support. So technically speaking, hey, why not buy on oil from just above the support level? And I stretch my stop loss below the support, and I say, hey, the news isn't all bad. There's potential really good news coming if the GDP numbers, the housing numbers out of the US, the European Central Bank has stuff to say today. There could be a reason for oil to go flying up other than the other obvious reasons. We talked in the last webinar, why is Goldman Sachs saying oil should reach 95 a barrel? Why are some others saying 100 a barrel soon before the end of the year potentially? Because for the most part, the world is opening up the economy, coming out of the global pandemic. I know there's some areas, like we mentioned, Germany and China, that have some outbreaks of the new strain, but overall, economies are opening up. And there's been a supply problem all around the world for all kinds of goods, where the supply can't keep up with the demand. There's not enough truckers in the US to stock shelves, things are selling so fast. Okay, so there's expectation of continued increased demand for energy as nations come out of the pandemic lockdowns. And so this is the expectation, is that oil could get driven up even further than where it went earlier this week. Now, there's no guarantee of that. So, I simulate a market buy here. Of course, I'm putting a stop loss somewhere. I'm risk managing in some way because nothing's guaranteed. Someone's asking what's the best time frame to look at. It depends if you're doing short-term scalping, long-term moves. I always say outside in or inside out. Look at all the time frames. So you understand everything, the big picture, the little picture, then make your move. So very good question. That's why I started on the 1 hour candle. Now I went to 4 hour and it gives me a better view of this support level. And so where might I put my take profit here? If I'm scalping and I'm not a long-term trader, I might say I'll take profit at the first resistance level, which would be right about there. Okay, resistance, resistance. And if I come here, resistance and down, yes, it broke through and became support earlier in the week, support, and then broke through, breakthrough candle. Remember we talked about that? It breaks through and then surges down to the next support level. Another example of that happening, sell stop would have worked perfect here. Below this support level, when it broke through, would have triggered a sell, and down it went to the next support level to hit your take profit. Now we're above this support level, and it looks like it's trying to decide, will it break or will it bounce? We did a market move on a bounce, and the potential profit is much greater, even to this first resistance level, than what I'm risking. Now, if you're a longer-term trader, you might put your stop loss up higher, okay? Depends on your goals. Now, what if the bad news comes today? What if there's bad news and fear goes through the roof? Oil could drop, the US dollar could strengthen and pull oil down. If that happens, again, we could have a sell stop pending order below this support level, ready to sell. Okay, somewhere down here at a price like here. If it hits that price, it means it broke the support level. Maybe you even go a little lower just to be sure it's a strong downtrend. At some point, maybe you're convinced that if it hits a certain price, that you would sell with a sell stop. So again, you could back up your market buy in this case with a sell stop in case everything goes bad and reverses. All right. I won't take the time to set that pending order up because it works exactly like the last pending order we just did as a sell stop. Okay. By the way, if you wanted a lower price before you buy, that would be a buy limit pending order. Again, in the web trade or AvaTrade Go, you would just put buy from, and you could put a lower price, and if it dropped down there, it would buy. Here, you would have to specifically pick pending order, buy limit, and program it to buy from down here, and a buy limit would buy from a lower price if it drops to it. Maybe you want to get closer to the support level and then buy if you're looking to buy instead of doing a market move. Completely up to you, but that's how you would do that. Gold, let's take a little bit of time to look at gold. Gold's an inflationary safe haven, typically. And so if fear goes through the roof, if it's not fear about inflation, then gold tends to drop as the US dollar strengthens. Meaning if the fear is about economies having trouble, bad job growth, that sort of thing, US dollar tends to strengthen as a safe haven and gold drops. If the fear is, wow, the economy's roaring too fast, which has been the fear in this past year, economies were recovering too fast, the prices of groceries and gasoline went up too quick. That's inflation. And that type of fear, inflationary fear, fear of rising prices too quickly, like the economy's doing too good, growing too fast, that is the type of fear that tends to drive up gold. So economic fear, gold tends to drop, US dollar strengthens. Inflationary fear on too fast of an expanding economy tends to drive gold up. And now, so your question is, if you want to trade on gold, well, what's the case? Which is which right now? There's been a lot of inflationary fear. In general, as you near the end of any calendar year, a lot of times people are looking to cash in on their riskier instruments such as stocks, etc. And a lot of times that can help drive gold up as a safe haven. It doesn't happen all the time, but it is there as a seasonal effect. So you could be thinking in that way too. If those GDP numbers come in today and show too much growth, then what happens to gold? Potentially it spikes up, right? So with those announcements coming in, housing numbers, GDP numbers out of the US, if those numbers show, wow, housing numbers went up really fast, more than expected, GDP growth was way more than expected, then you could see gold go flying up. Or the opposite. The one headline suggested maybe the third quarter was a little stunted, slowed by the new variant in COVID, and maybe the GDP numbers will disappoint. Okay, if that's the case, then the U.S. dollar could strengthen and gold could come flying down. So technically speaking, we could prepare for both. And so we can look at something like 1 hour candles and say, okay, I see a resistance level here. Whoops, that's the wrong direction line. Let me get rid of that. I want a horizontal line. We see a resistance level here, and we see a potential support level here, right? So let's pretend we're near the announcements, the GDP numbers, the housing numbers out of the US, and let's pretend the movement is still ranging between this price level. This is a strategy you would need to wait until it's closer to the announcements. And once it gets closer, if this is where it's ranging between these two levels, that's only $10 apart, $5 up, $5 down, approximately. So you could put a buy stop pending order up here. If it breaks the resistance, then inflationary fear must have come from those numbers that come out later. And if it breaks the support, then hey, economic fear must have come that things didn't grow enough and the US dollar is strengthening. Whichever happens, we don't have to try and guess. You can have a breakout strategy that if it breaks through the resistance, you get in on the buy stop. If it breaks through the support, you get in on the sell stop. Type okay if you're with me on that or any questions. And again, you would prepare the buy stop and sell stop just like I showed in the example. And better yet, go to the web trader or AvaTrade Go. You can be logged into your phone on AvaTrade Go while you're using the MT4. You can go to the order window, set your price levels that you want for getting in, and you can say buy from and put the price you want. That's it. You don't have to tell it what type of pending order. If it hits it, it'll buy. You can put sell from pending order on the app, and that's it. Put the price and it'll make it the right type. All right, tremendous. I think this is a good place to stop. We've been going for almost 40 minutes. I know after about that length of time, folks start to get a little antsy. The strategies we've used and the examples we've used on gold and oil and the S&P 500, those examples can be used on any instrument. Could be currency pairings. It can be any number of things that you're trading on, cryptocurrencies, and you follow the same support and resistance ranging pattern. If the news doesn't change, I could be selling from this resistance and buying from the support if there wasn't big news coming. If there is big news coming, you're banking on maybe a breakthrough for a buy stop and a sell stop rather than a buy limit and a sell limit, which would be for the ranging movements. But you can use these strategies on any instrument. Just look at the fundamentals, look at the announcements, get an idea of, okay, do I expect large, big news to change patterns? You're looking for breakthrough moves then? Or do I expect kind of a low news day and ranging movements? Then you're using buy limit and sell limit for it to just keep bouncing up and down. Two different strategies, but the same idea. Okay, thank you all for joining. I don't see any questions popping up. You're very welcome. Thank you all for coming. My next session will be next Tuesday evening at 6 p.m. UK time.